Welcome to today's market update. I'm Maya Keynes, joined by financial expert Eli Sterling. Today we're diving into key developments affecting both crypto and traditional markets. Eli, let's begin with what's driving conversations across Wall Street and the cryptosphere.
Thanks, Maya. Two big themes are dominating headlines. First, the potential elimination of the de minimis tariff rule, which currently exempts imports under $800 from tariffs. This policy, dating back to the 1930s, is being reconsidered due to concerns over unchecked fentanyl shipments from China and unfair competition for U.S. retailers. Small businesses, like Harriet Winton's UK-based art supply company, rely heavily on this rule for cost-effective global shipping.
That could have ripple effects across e-commerce and logistics sectors. Now, turning to digital assets, Arthur Hayes and Alan Marshall are suggesting the traditional 4-year Bitcoin cycle may be dead. What does that mean for investors?
Exactly, Maya. Hayes believes the next major Bitcoin rally could come from massive monetary expansion by the US and China, potentially pushing Bitcoin to $1 million. He argues it's really about fiat liquidity between these two giants. If true, this changes how we think about Bitcoin's price drivers beyond the halving events.
Let's look at some live technical analysis. We're seeing a bearish shift in Ethereum on the daily timeframe using the stochastic relative strength index strategy. Can you walk us through what the indicators are telling us?
Absolutely. Ethereum Tether is showing a moderate bullish trend based on average directional index readings, but momentum is weakening. The stochastic relative strength index is deeply oversold, and moving average convergence divergence shows diminishing bullish strength. Meanwhile, average true range has spiked, indicating increased volatility and larger price swings ahead. Volume remains strong, supporting the current trend, but caution is warranted.
So traders should prepare for wider stops and smaller positions given that volatility.
Precisely. With average true range hitting 400.30, stop losses should be set at least 600 to 800 points away. That means adjusting position sizes accordingly to manage risk effectively.
Now let's turn to Solana. Our buy-hold-sell indicator shows a strong bullish signal across 5 weekly periods. Is this a green light for long-term holders?
Yes, the buy-hold-sell model shows consistent gold signals, with V1 staying above V2, signaling sustained buying pressure. However, always keep an eye on broader market conditions and macroeconomic shifts that could affect even the strongest technical setups.
And finally, Nvidia stock. It saw a sharp 13% drop over 2 sessions earlier this week, confirmed by high trading volumes. What's behind this tech giant's sudden downturn?
The breakdown in Nvidia's trend structure tells the story. We've seen lower highs and lower lows form, closing below prior support levels. A volume spike of 18.4 million on October 10th confirms intense selling pressure. Traders are now watching $192.50 to $193.55 as key resistance, while support sits at the recent low of $182.39.
To wrap up, what should our audience be watching tomorrow?
Keep an eye on whether Bitcoin can hold above its 50-week simple moving average around $3,105, and watch for any policy updates regarding the de minimis rule. In equities, monitor Nvidia's ability to reclaim the $192 level, and stay tuned for further signals from the buy-hold-sell models on major cryptos like Solana and Avalanche.
Thank you, Eli, and thank you for joining us. Don't forget to subscribe for real-time updates and in-depth analysis every weekday. Until next time, I'm Maya Keynes. Stay informed, stay invested.